Welcome back to our series of talking points. Now, for those who are new to the series or the channel, you've landed on an absolute goldmine. So each week we share a video pertaining to a specific topic of wealth creation. Now, here at the Wealth Masters Club, our core fundamentals are based around the creation of wealth with property investments in specialized trusts. But what we do is a little bit unconventional, but to find out more about that, stay tuned until the end of the video. In today's talking point, we're going to be talking a little bit about the correct structures. And I think the sad part about estate planning is that most people only realize far too late that they need to start planning for the inevitable. So this is why so many people are in the same situations where they cannot even afford to pay for their spouse's funeral. Now, the key to remember here is that it's never too early to start planning. And like the old saying goes, failing to plan is planning to fail. So to talk a little bit more on the point of planning, I'd like to welcome the founder of the Wealth Masters Club, Coert Coetzee. Coert, thank you so much for joining us today.
Good morning, Damien. Yes, thanks for having me here.
Wonderful. Now, last week you wrote an article, and I just want to delve a little bit deeper in terms of, the points that were raised there and how you see things. So we talk quite a lot about death costs, but what exactly is that?
Sure, Damien, it is a mouthful, if you can say. And it's actually amazing that so few people are aware of it. And I think it is kept away from people, from the general public, deliberately by some parties who have an interest to keep it away from the people. Yes, death cost is when you die, the first thing that happens that is very inconvenient for your spouse and your children is that all your bank accounts are frozen. The estate is frozen immediately. You cannot get money from it, nothing, until it is settled, which can take years for a big estate to be settled, for example. But the death cost as such is when it is settled, or after it is settled, or during the settlement or settling of the estate, then the executors of the state will pay. At some states, they have to pay, in terms of the law, 25% estate duty. It's 25% of the net value. So maybe that is not so much. But still, it's 25% of whatever your net worth is. It's gone. It's gone. It is a tax. It is compulsory. You must pay it. It's the law. And the executors of the state, they charge a fee of 4%. And that 4% can even be more than a 25% because the 4% is on the gross value of your estate. So it's even on your mortgages. 4% of everything goes to the executors of the gross value of your estate. And then for the estate, eventually when the last spouse dies, then for the assets to go over to the children, capital gains tax will kick in, which is 18%. Now we are talking now already 47% if the estate is gone. 47%. Now, the point is all these things that I just mentioned, all these taxes and fees, all of them are payable in cash. Not with property, not with gold, not with shares, cash. So your assets will have to be liquidated to create that kind of cash. And in that liquidation process, there's a 10% auctioneer fee because it goes on auction, and about 50% is wiped out because that is the going rate on these sale of execution auctions. The assets are selling for about 50% of their value, if that much. So the estate is actually destroyed completely. More than 100% is gone. That is why so many deceased estates end up bankrupt, insolvent.
Yep.
So that is what we try to prevent here. Okay, the guys there are people who don't want the general public to know about these things. And as far as I'm concerned, it's very unethical not to tell your clients about this cost. Sometimes they do, but then they will say, right, that 25% estate duty, don't worry. We will take out, we will arrange a life insurance policy for you that will pay out that amount. It sounds good. It sounds possible. And that includes even the 4%. So all your costs, even the capital gains tax, that's all 47%. Your life insurance policy will pay out enough money to have that liquidity then eventually in your deceased estate, and then nothing will have to go on auction. Okay, that life insurance policy will be a very, very expensive life insurance policy for a wealthy person. You can just imagine. You're talking about here about, say, minimum 20 million on that policy. So depending on your age, if you are older, then it will be like unaffordable to take out new life insurance for that amount. So that's not going to work. Those days when you were young and when these so-called estate planners zoomed in on you and you took out a policy those days, say for example, for 5 million, because they do a calculation at that stage with your income and they project it into the future and all those things. And they say, right, you will need this kind of money. So let's take out a life insurance policy. It will be about 5 million or so. And then the thing is, as you grow older, you make more money than anticipated. I think most people make actually most of their money after 60 years of age. So that is when things are just happening. All the things that you put together your whole life is that at that stage just paying off, especially if you're a property investor. And that is what our club is about. That is when the capital growth is phenomenal. And then that 5 million policy will not work because it's not enough. Then you're 60 and you want to increase it now to 20 million. It's like impossible. Sorry, I made a long story. It was actually a short question.
I think that's the point of this. The more we know, the more we can learn. But Coert, you also mentioned that these taxes are law. So is it actually legal to create structures that can avoid all of these death costs and taxes?
Oh, yes, it's legal. Tax avoidance is legal. Tax evasion is illegal, just to clarify that. So what we are doing here is all within the law. There are, like, for example, we do it with a trust. So if you put everything in a trust now while you're alive, it's so cheap to put it in a trust. It costs really next to nothing. The biggest expense to put property in a trust will be, for example, the transfer duty that you have to pay on properties of more than R1 million. Now we have ways to avoid that also, or to cut it with at least 75% or 100% with, we call it our ALA method or our user-fruct method and so on. So all those things are possible, and we have, and it all helps to contribute to the solution that move everything into a trust now, and then on your death, the trust did not die. So none of these percentages that I just mentioned will then be applicable. No estate duty, no executor's fees, no capital gains tax, no auctioneer commission, no auctions. So the whole estate will go over to the next generation or to your spouse.
Now, in the article that you wrote last week, it relates to a widow that you and your wife Vanessa met on your travels. So if you were there before the passing of her late husband, what advice would you have given them at that point to avoid all of these death costs and taxes that they had to endure over 4 years?
Well, I will just show them the potential damage that they're going to suffer from a state duty of 25%. I think if you point these things out to any person, any normal person, point out, do you want to pay 25%? Or do you want your spouse to pay 25% after your death? Then definitely the person will say no. If he's not saying no, then definitely his wife will say definitely not. We must make a plan. So because she's actually the victim, not the guy that was blinded or tricked by the insurance companies and by the financial advisors. No, he's actually not the victim. He's dead. He's deceased. So it's actually the people that are staying behind. So just pointing out these things, because nobody is talking about these things. You will not find a radio show where they talk about these things, unless I'm the one that they interview. But the whole insurance industry, the whole financial industry in that regard actually is avoiding this. They don't want to mention these things because they know the moment that they mention these percentages that are payable, they will lose their client for their other products on which they make money. They would rather like to sell insurance to you. They would rather like to tell you how good an executor they are and how good they will wind up your estate one day and all those things. What people also are not aware of, executors are, in terms of the law, executors are entitled to 6% of the income of your estate for the time that they are the executors of the estate. Now you understand why it takes so long for estates to be winded up, especially big estates. They make money. So it's a whole money-making thing here, while ours is a money-avoiding thing. We avoid paying all these taxes. Rather address the problem now, and nobody in future will have a problem within your family. Then your assets can go over to the next generation with zero cost. Yeah, I think if I had the opportunity to speak to them before he passed away, and especially the story goes about a chief economist of one of our leading banks. So it's actually shocking. It was shocking for me to realize, after the widow, told me the story, it was shocking to realize that the chief economist, a learned person, learned in financials, in taxes, that person is not aware of it. I think it is maybe because we are the first ones who take that whole thick such book or bundle or manual, and we took out these few things and put them together. And now all of a sudden, having them all on one page, estate duty 25%, executives 4%, capital gains tax 18%, auctioneer fees 10%, value loss on auctions 50%. Now it's making sense. We all knew it all the time, but nobody has ever packaged it like we do. And the package is actually now the thing that is making absolute common sense.
Coert, in your opinion, why do you think so few people actually know about these methods? And on top of that, why do you think so few people are actually jumping at the opportunity to adopt these methods in their future planning?
Well, the thing is, the ordinary person is not familiar with these things, because you cannot expect the ordinary person to study the tax manual and all the relevant laws going with it. So that's what attorneys do. But I think maybe an attorney will give you better advice than a financial advisor, because a financial advisor, and I'm talking registered financial advisors, and I think their main goal is to sell the products of the companies that they represent. And that's their job. Actually, I don't think they are bad people. Don't think that. And that's not what I say. Maybe maybe they themselves are not aware of these things. So over the years, we had many financial advisors who came to our seminars and our training sessions and so on. And many of them came to me during tea time and lunchtime and said, "Could you open my eyes today?" In all the courses at the insurance company that I represent, in all the courses that they presented and that I attended over the years, they never, ever mentioned these things. Now, can you now expect a financial advisor to go and read that thick tax manual or all the laws related? He's not an attorney. He's not a tax specialist. He's a financial advisor, and he's trained by the insurance company. So the insurance, so I think it's their duty to train them properly. But if they train them to avoid these things, then there's no reason to sell life insurance to that person. So it's a catch. What do they call it? The catch-22 situation, yeah, for them.
Fantastic. Coert, thank you so much for your insights. I mean, I'd love to spend at least another hour talking about the topic, but I know you're quite busy preparing for a couple of upcoming events and mentoring sessions. But if you at home would like to hear a little bit more about the topic that we spoke about today, not just the planning, but also how you can take that planning and use that to become a successful property investor, then you can join us for an absolutely free online training session taking place from Saturday. And you will have 4 days to stream this straight from the comfort of your home in both English and Afrikaans. So you can wake up on Saturday, sit in bed and learn and make sure that you are preparing for your future. If you'd like to register for the spot coming up this weekend, click on the link in the description and we will send you all of the information. But for now, Coert, thank you so much for joining us. We really appreciate your time as always, and we hope to see you very soon.
Thank you, Damien. Cheers.
Bye-bye, everybody.